Hello everybody, welcome to another live trading session with Mint Market. Let me remind you first that all being said here is my personal opinion. I'm operating in a demo account only. That's not a financial advice in any way, so please do not copy or do trade decisions on based what I'm saying or executing here in a demo account. Happy to be back, and let's see if we can find some profitable demo trades or analysis this session. We have no news today so far. But we saw a spike today, a new all-time high, and a retracement since, and I will shortly guide you through my personal trading session routine. All right. So what I'm personally doing when I'm trading the S&P is first trying to do a higher time frame analysis. So we have a new high in the S&P. We were above 5,000. Yesterday we had a down close, a hashtag slash consolidating day. In the morning we had a spike after and before the 9:30 market open, and we have a retracement since. So my overall bias is still bullish until proven otherwise. So I'm not looking to short the S&P until I get a significant market structure shift here. So my daily bias, let's have a look at the weekly candle as well. Also the weekly candle already showed a huge expansion. So I am still bullish. However, we had a pretty significant up move already today. So we have to be aware that we might see a retracement on Friday. So from Monday to Friday, the weekly range so far is pretty significant. So the lowest low on Monday to the highest high on today, Friday, was around 100 handles in the S&P, which is equivalent of 2%. So we have to be careful because we might have already seen the weekly high this week, and we might see a drop here. So what I'm looking is a 20 to 30% retracement after such a weekly expansion is possible. So that's what I'm factoring in with in my bias. So I will actually, the 23% level, so between 20 and 30, we're actually around today's high. So actually, yeah, yesterday's high. There is nothing really exciting on the 4-hour, except that we have this wick here. This wick, I want to grade that. I want to see if we are able to trade above the 50% level of this wick here. And I also want to grade the 25% level of that wick. So I want to grade that as well. So these red lines are level of interest for me today. I want to see if we can get to them or above them. So far we showed weakness, and again we already saw the retracement actually from the high. So if we measure the low here on Monday, here Monday, February 5th, to the today's high, we had already a retracement of around 25% of the weekly range. So that was basically the TGIF setup according to my mentor ICT, which is roughly the red line, which is the previous day's highs. So retracement to here, that's what I expect on what we can expect on Fridays and what we already saw here. And the question for today's session is now, are we able to trade above the 5, let's say it roughly the 530 level, and or trade or close above the 535 level. Again, my bias stays bullish, my long-term daily bias stays bullish until proven otherwise. Doesn't mean that my today's session bias is necessarily bullish. I have to figure out yet still. We had a retracement to the high of Wednesday's session and today's morning session. We had a run up, we had a stop run after, a decline after at 9:30, and we took out the stops here. So sell side liquidity here is taken. The next sell side liquidity is below here, 516, and buy side liquidity, the buy side targets are here, 530 and 535 roughly, which I'm interested in. So far, so gun to my head, I'm not sure yet what trade I want to take. Gun to my head, I think I'm more interested in the bullish side as of now. I'm not sure if we see a new daily high today, but what I'm interested is seeing this high here. So I think the next one draw on liquidity is here. We'll mark that blue here. Buy side liquidity. That's, I think, where buy side draw could be. Again, why do I think that? Because we have taken out the sell side liquidity at 9:30, and we have a market structure shift since then. We broke this high here, and we have people who shorted have their stops above here. So I think that's a valid buy side liquidity draw. However, we have to be careful because it's Friday. We saw the Friday TGIF retracement already, in my opinion. And we are in the middle of the range here. If we take this high to this low, we are in the middle of the range. We took buy side liquidity is taken, sell side liquidity is taken, and we are back close to the middle of the range here. We can refine that to the bodies as well here. Maybe not on the 1 minute chart, but let's refine it to the bodies of the 5 minute chart, for example. And you can see 50% levels here, and we're back in a range. So at the moment, it's not a high probability trade environment for me. It's more a low probability trade environment. However, gun to my head, I think this buy side liquidity is next. We have stops above here, 530. It's roughly 5 pips from where we are now. And it's also the first quarter of this candle's wick here, which I'm interested in looking if we can get to it and through it, or if we go to it and reject it maybe. Because I wanna, how we trade inside this wick tells me if we see a continuation or a reversal. So what else to my routine? We would have had a nice trade entry here at 910. We have no news events today, so it's only price action today, no news. Also, if you are interested, you can follow me or us on Mint Markets Twitter, and I will post some trades here which are outside of the scope of this live stream here. Let me check. Nice, we are live in fact. And we had a nice short entry here at 910 today. We have a fair value gap here. Bodies candle, no immediate trading to the left and to the right. And we can see that the price retraced here and went for the sell side liquidity down here. And I think this high at 530 is under jeopardy at the moment. No trade entry for me right now. Still no fair value gap I can take an entry on. And also the range for me is too small. I'm not entering a trade with a target of 3 pips potentially. So trade entry could have been here on the 1 minute chart for a long. So trade bullish could have been entry here at 524 with the target of 6 pips, going for 530.75. 5 handles in the S&P. That's around 1% with a 10x leverage. More than enough for 1 week, if you would get that. Another potential fair value gap, another trade entry here if I would be taking a long here. So that's a potential trade entry here. However, the conditions for me are not too high probability. So Also entry here would give me like 3.5 pips. That's not really enough. Stop would be, entry would be here. Let me show you what trade I could potentially see on the 1 minute chart, which I'm not taking because I don't think it's high probability, but would be here. Stop off one could enter a stop here with below this low here 2 pips and go for 3.5 pips, but that's really a very small scalp here. I would not take that one. Just showing you my idea here, what I think, and we would probably get stopped out here anyways. So we have buy side liquidity here, and let me mark the sell side liquidity here. So again, touch of this fair value gap. So I will take a demo trade here now. We had a stop run here on the 1 minute chart, and we had a touch here of this fair value gap again. And I will just show you example of a trade here, what I could see. Stop needs to go below this candle here. We have a below this fair value gap here, and would like the bodies to close above the 50% level of this wick, and definitely above this low of this fair value gap here. And if I'm correct, why am I thinking that? Sell side liquidity was taken here. We had a shift in market structure here. People who chased shorts have their stops above here or above here, and I just think that's a logical level to be taken. However, the price action is probably not very high probability for my liking. So I will take a partial above. I will take a partial if we get above this high here at 528.50. My stop, if I'm correct, should be safe in here. If not, I'm wrong anyways. I would like to see speed here. I would like to see price not come back into this fair value gap. Definitely don't want to see it close here. We already took short-term liquidity here. We traded 3 times into this fair value gap, so it should run now if I'm correct with my trade idea. I have 5 handle target, and I have 3.5 handle stop loss here. So everything is set up. I don't like that it's chopping around here. I think we should have seen more speed so far, and because of this I will reduce the risk a little bit. I will take 2 contracts off here. And we'll leave the rest run. We should see green candles now, and we should see higher highs and price stay above for my liking. I mean, this is still reasonable, it's still okay. But it's not super clean. Let's see what we get. The risk is reduced anyway, so not a big deal if that one does not pay out. So let me check the new week and the opening range gap here. Therefore I go to regular trading hours here, and I'm looking at the gap between yesterday's trading and today's market opening at 9:30. So what I'm looking, therefore I will go on the 5-minute chart, and we had market close yesterday, Thursday the 8th here, and the opening bell was here at 9:30. So what I'm so nice, we took the first high. I will take another partial here, and I will now move the stop. I'll move the stop below here. Now that I took partials, the trade is basically risk-free. Yeah, it is risk-free now, so I can't lose money on that trade anymore, whatever happens. And also I follow my rules, because we took out highs, so what I don't want to see a high taken out and then another low be broken. So my stop is now below this low here, and also below the 50% level of this wick, and we have a inversion fair value gap here. We had a bullish fair value gap here traded through, so that one is a inversion fair value gap here, so that should be support here now. That should lend us support here now, and trying to take out the 530.75 buy side liquidity. My stop should be safe, and if not, I don't care, since I'm risk-free. So what I did now is regular trading hours. I annotated the opening range gap. So opening range gap. Looks like we're going back again. one more touch into this fair value gap here. And close to my stop. Even if my stop gets hit, I still think this is a likely draw or a possible draw. One more time into the fair value gap here. Let's see if we can have another support here. Very choppy price action so far. Let's remove some lines here to have the chart not that. And we have a touch in this fair value gap here, this inversion fair value gap, and a retracement here. I think still the draw is slightly bullish here. I will remove that one as well. These two are kind of importance still. It's not really nice reaction and price action so far. So I'm happy that I reduced the risk and that I risk-free with that trade. And for me, interesting, we should see a green candle now, bullish green up close candle now, for my liking. This candle here should ideally be a green up close candle in order to confirm that I'm on the right side. It should go above this red candle here and should close there. I want to see speed here. That's what I want to see, and I want to see it close. Exactly, that's what I want to see. And I want to see it close there. For me, that buy side liquidity makes sense. I think it should want to clear that one. It's very choppy, so I will just pay myself and take another contract off, and just since this trade is really a low resistance liquidity run and it's really shitty price action. I just want to leave the lowest risk on here, just to see if it pans out. But yeah, I'm risk free now and who cares? So what I also want to check is the New York midnight price. I use this as an indicator if we are kind of overbought or oversold as well. So New York midnight price here, midnight opening price here. Okay. Friday. Why doesn't it change to red? Text is red. Okay. Maybe I'm too stupid at the moment, but I don't get why it's not changing. So the reaction so far, so good. We're still, the trade is still very choppy, but still valid so far. So I think still 530.75 in the S&P mini futures is where I think we are likely going to go. We are above the New York midnight price. I use that as an indicator for discount and premium. So if I'm bullish, I want to buy below actually. And if I'm bearish, I want to buy above the New York midnight price. However, if we are too far away, the second price level I'd like to use as an indicator is the 830 level. And since we have already moved away, I will do the same with the 830 price level here, and 830 opening price is actually here, and we can see that we have actually bought at the 830 opening. Price went below for a discount, and so that is in line with my concepts and with my ideas. Don't want to keep the chart too busy. New York midnight price. We have the 830 price. Now I know what's the problem. It's just the text changing here. change the color here. So we have another buy side swept again. So far, so good. So let me outline the trade idea here again. So that was the initial entry with the stop here below this candle here, which is a 1.5 risk reward ratio, and now we are down to risk reward of 2.6 with the adjusted stop after the partials. So that's my trade idea here, and so far it looks good. It looks quite promising so far. And I would not feel safe if my stop would be above here now. Yeah, so we're also closed above the 50% level this week here, and now we took it out, and I think it's just a matter of time until my target here. It should be just a matter of time until my target gets hit here. And well, just fell short. I'll put my stop in profit now in case it reverses. To that tick, but didn't. To the very tick, but the spread here didn't close my position. So now we're filled. Nice one. I'm glad that this one paid out here live on YouTube. It's always especially nice you stream it and you're on the right side. So let me show you the executions with the partial closes. So entry was down here in this fair value gap. We ICT Silver Bullet concept. Stop was below this candle here, and I was going for 5 pips. And we have the first target was this buy side liquidity here, and also the first quarter of the 4. Oh, holy shit! All my executions. And the first quarter of this 4-hour wick here, which we just traded to. And I'm curious how we will react there. So here again the executions, and I didn't get the full trade because I reduced the risk early, but at least around 500 demo bucks here. So that was the trade for this session. I guess there's nothing I can see as of right now here. So I think until we don't see anything else very exciting in price action, I think that was my trade for today's session. Don't think there is anything else I'm going to take. And on the other side, my model tells me that I should stay on the sidelines, or that I have to stay on the sidelines anyways when I take a profitable trade. I should not jump in right into the next just because it feels good, just another dopamine hit. So yeah, I think we have buy side liquidity taken here. We have reached the 4th quarter here, so I think now a retracement is likely. I don't know exactly how far, but just for measuring purpose, we have sell side liquidity at the moment here. We might continue, but if we retrace or collapse from here, next sell side liquidity is here. And we are still pretty much in the middle of this range from this high to this low. So at the moment I would be neutral. I would stay on the sidelines. My trade idea, we might go higher. We might go to 535 eventually. But at the moment, nothing of high probability in my opinion so far. We might see a trade to 534.25 eventually. So roughly 535, 5035. Five pips is a potential bread and butter trade for that would would be enough. 5 handles a week, a day or a week would be enough for bread and butter. We can also see let me outline previous. We have seen a retracement to the Wednesday's session low after the rally, and what I want to see is yesterday's session, which was pretty choppy. However, 9:30 to 12. And so these previous days session highs and lows, I use them as targets, as liquidity targets. So, and what we can nicely see here, that the previous day's PM session from 1:30 to 1 to 4 PM New York local time, the high was acting as support once we traded through and came back to the top here. The wicks went through, but the bodies, they came exactly to the high of the previous day's session, and that is a potential support level if we are bullish. So very nice price delivery here actually from that point of view. And we have also Wednesday's session high pretty. So for retail traders, that would be a nice support broken, turning resistance level actually. So buy side liquidity taken, target hit. I think, gun to my head, we will still see a further continuation higher to potentially 435 some point today. Also, we have another potential bullish trade entry here. We have a fair value gap here. Has just traded into this fair value gap, so I'm not going to take another trade today, but that right here, if we have a strong belief that price is going to draw up further higher, this retracement here into this fair value gap with a stop here, that is a valid trade entry according to my model here. Let me show you what I mean here. So entry would be here in this fair value gap. Stop would have to be below this low here, 1020, and target would be the 5035 level. So roughly 1 point. Not the best risk reward ratio, but still, in terms of time, in terms of my model, a valid trade, which I'm just observing. Even though my dopamine level tells me, come on, take the next trade. You just had a feel good result. Don't you want to repeat that? less trading is more in terms of performance. I'm still learning that over trading kills your performance. Not only the spread, but also the overall performance. So far it looks like we are going higher, and again my next target would be the midpoint of this candle's wick here on the 4-hour chart, which is roughly 5035. We have not closed yet, but we might close above the first quarter level here, and then the next level would be that one eventually. Eventually. So again, if you watching this video, would be really cool. One person watching, great. Would be really cool if you could, or if you watch it later, would be really cool if you're new to subscribe the channel, and if you can leave the video a like here, so that we can grow with this channel. If you like the analysis, if you like the live streams and what I'm doing here, and you can again subscribe the channel here, Mint Markets, and if you're interested you can also follow me on Mint Markets on Twitter, and I will sometimes post here news and also trades I'm doing outside my live sessions here. So the session is coming to an end soon, so we have 10 minutes left, 10 minutes potential time to take a trade in my personal trading session at the New York AM session. Also what we're having now is the macro. The AM macro begins from 10:50. Between 11:10 there is a macro starting, so we might see a move starting in 1 minute in this 20-minute window. So far, no real movement. I mean, we have the bodies here have closed above the 50% level of this wick here, so I'm expecting higher prices now. I think this fair value gap, the trade idea I told you, should be reasonable. It should pay out. So again here, the trader day I showed you here, I think it's still valid. Stop, or actually the stop is too high. The stop would need to be above this candle's body here. We have a fair value gap here, a body, no trading immediately to the left and to the right. Price traded in that level, and we could have taken a long here. And at the moment, it looks like the trade is valid and it's going to pay out. And my next target projection is here, 5035. Let's see what we get. Price action was really choppy. The last two sessions. It was choppy yesterday in the evening, it was choppy in the morning, and today at 8:30 we had, without news, we had a big run. Everybody who at market opened tried to chase that, or everybody with the morning session tried to chase that, and then we saw a knockout of the sell side liquidity, and after the knockout of the sell side liquidity, another higher prices. What we can also look is, we can look at the Nasdaq real quick. Nasdaq is much more energetic than the ES. We have a new high since the Nasdaq did the same. Nasdaq took out sell side liquidity here at 9:30 and then was able to make a new daily high. The S&P is still behind, so the S&P is the weaker here. Is clearly the weaker here. So we might see a sister concept here. So we might see the S&P follow along the Nasdaq and make a higher high as well at some later point in time. Let me check the dollar index really quickly as well. Oh, that's a mess. Dollar index dropped. Retraced and dropped again, and is here now in consolidation. And the dollar index in dropping and in consolidation is allowing, or was allowing, the S&P and the Nasdaq to rally higher. So these are in line here. And I think the S&P is about to catch up here. All right, guys, the session is almost over. there's nothing else I'm currently interested anymore. And I will close the live stream here. I will try to be back next week, and I wish you a pleasant afternoon and